Well, thank you very, very much for joining me here for the PivotBoss Monthly Market Outlook for April 2021. Today is Monday, April 5th, 2021, and so far we've seen the market begin the month of April very, very positively. From the first trading day last Thursday, we've seen a very strong move higher. We've seen a couple of Thursdays in a row be very important to the market over the last couple of weeks, and we're now seeing a very solid breakout up ahead. I do want to say really quickly, for the purposes of the recording here, my Thinkorswim for this account here was acting up with technical glitches, so I wasn't able to access it over the last hour, 45 minutes or so. So I am going to use NinjaTrader 8. This is NinjaTrader 8, so it does kind of limit the focus of what I was initially going to look at, but we'll be able to look at enough stocks and stock information here. If you have any requests you'd like me to look at, please type it in the chat. You can use the trading room chat, or you can also use the chat here in Zoom as well. I'll be looking at both of those. Again, right now, I'm going to start with stocks at the moment, but from a broader perspective, what I'm going to do here is look at the QQQ. To give a sense of tech and what could be to come here. You'll notice with this one, we've had, and this was very apparent, especially in the NQ, we had a market here that went mostly sideways. What I'm going to do is I'm going to bring up my drawing tools as well. By the way, thank you for joining me here today. My name is Frank Ochoa, also known as PivotBoss. I wrote a book named Secrets of a PivotBoss that some of you may know. And this is a monthly session here we do each month to look at kind of the broader idea of where the market might be headed over the next month to 3 months or maybe even beyond. We also try to look for stock opportunities that could fit the bill from a swing perspective or kind of a position perspective, or even perhaps something that can be much bigger of a prospect as well. So trying to cover all the bases here. If you have any questions, or if you have any particular stocks you'd like me to take a look at, please let me know in the chat, and I'll be glad to do that when we have time. Right now, this is a really good chart here, and again, this is not my normal layout. Again, you know I normally do kind of a white background, but these are my tools here. So we do have the PivotBoss bands on here. These are composite bands. We have PivotBoss pivots on a monthly basis. We also have the advanced ADR indicator down here. One thing that is very apparent right now is that we have begun the month with a ton of strength here. If you take a look at QQQ, you can see how compressed this month has been. But it wasn't just this recent month or so. If you look back to the previous year's close is, I believe, this day right there. And so if you just bring that over, you'll notice that we basically went flat for the entire first quarter. As a matter of fact, if you look at the previous closes, that's the close, right? And then it closed here, and then it closed there. Those are 3 months in a row where it closed basically the same. And so it was a tightly compressed, tightly wound range here. After a couple of strong lows here recently, we've seen the market pick up here lately. And one of the things we were looking for was a breakout through 3-day highs, and that occurred last Thursday, April 1st. It was a strong breakout move. We've since seen a continuation here of that over the last several days here. And this breakout, especially the fact that it was able to get back above 325, opens up the potential to see a push to new highs, and also a continuation throughout the month where price likely closes the month near the highs of the month in the best case scenario. Additionally, this could trigger several months of strength. So you could see 1, 2, or 3 months of strength up ahead for Q4 based off of this compression that we've seen here over the last quarter. So a very strong start for the NASDAQ 100 from both the futures and the ETF perspective. This type of move could typically lift all boats if this thing really continues, because obviously tech has been the one that has taken more of a beating here than the broader market. It has several stocks in the tech space getting cut by a third or by 50% or more in some cases, but they've started to show signs of a strong low, starting to see signs of strength off that low, and after this compression phase here, this could be a big trigger here for a continuation down the road. So very strong recovery here from the QQQ and as well as the future, the NQ. From an IWM perspective, IWM. So Russell 2000. This one's really good here because of the big strength it's continued to see, but also it's had some pretty significant rotations, and each time it's had an ability to bounce back very quickly with a bit of strength. And the recent pullback on this low here came just shy of taking out the low of the month. It's continued to see higher lows this entire way. Higher low developed here with a failed new low, and we're now seeing a push back across the range. The idea here, at least in the next 1 to 2 weeks, is that we continue to push higher toward new highs. We have kind of almost an expanding looking range here that's developed, and the idea is that this likely continues toward the upper end of this range and pushes through those highs. That would push this market into the 235 to 240 zone. And again, any pullback right now could still be an opportunity to buy. So if say price pulls back tomorrow and takes out multiple day lows here, but ends with a strong rejection, that could be again a continuation to new highs type of play. So this market right now appears poised for new strength up ahead. Unfortunately, not able to use Thinkorswim here today, but you'll notice this strong low up to that high is the key range that I'm using for RTY and IWM. I had it marked on the other one. I had just marked it, and now it's not there. But this low to that high down to the midpoint there gives you a very good key range. And for the most part, it's about 30 handles for IWM here, 205 to 235. So that means we could be looking at a 265 continuation play down the road. So once it's done with this kind of range-bound price action here, we may be looking at a move that takes us to about 235 based on that range. As a matter of fact, it's 261.85 because it's got the low from the PivotBoss pivot low, the high here, and the range is extended higher right there. So it's already using it, and it's built into the PivotBoss pivots for this month. So 261 could be a very nice continuation. So the theme here is that the ES, NQ, IWM, YM, they all continue to show strength here, and now the NQ is starting to pick up. The ES as well. Oh, let's do SPY. I haven't updated the futures in the database here just yet. This one's gotten a very solid breakout and continuation. There's the ascending wedge that I mentioned in the pre-market videos where you had this wedge that was coming into play. An ascending wedge tends to break to the flat side, that's to the upside. Very good push and return away from that level. And now any pullback toward that breakout point could provide a breakout, retest, and go. So the retest of that breakout point at the top of that pattern for a continuation to the upside. Again, if you're using this low to this high as your key range, then you're looking at a move that could take you up to 424 for the SPY. 424 right now we're trading 406. One thing about this market though is has continued to trade within a channeling structure. So anytime it does get to the upper end of that channel, there tends to be some sort of pullback, and the pullbacks have become progressively bigger or more volatile than they had in the past. So if there is some sort of major failure or reaction at this edge, we could very well see a return back toward the lower end of the channel before it continues higher. But the way this looks, it looks kind of like a breakout to the upside. So again, any near-term pullback could still be a buy for continuation up. So again, the point is this market remains very strong. We're getting bounces across the board, and what we're seeing is a big-time resurgence of tech, with the NQ breaking to the upside finally, and getting an upside continuation at this moment. Yeah, that could certainly lead to more strength ahead. So with that in mind, we'll take a look at several stocks that could also follow or piggyback off these moves and continue higher as well. One of the ones that I wanted to talk about here is Twitter. And again, in not having Thinkorswim, I don't have my key ranges here, but if you're looking at this from home here, that high down to this low and the midpoint is the key range. So you have this sell-off here, so you get that strong high, you drop all the way down to this strong low, and then you bounce back up to the midpoint of that range, and that's now your big key range. And one thing you're seeing here with Twitter is that price pushed down through the bottom of the key range low and then bounced. And now the pullback here today dropped right into that key range low and closed back above 2-day lows. So it was a failed new low with a higher low component here. That looks really solid. That looks as though a return back up towards 70 could be seen, somewhere between 68 and 70. With a shot to see a move to the upper end of the range and perhaps even through that range ahead. So again, when you have a key range, one of the things you're looking for is for that extension of that key range and where it might take you. You know, you got your high right here, you got your low right there, and let's see. So that's about 81. This low over here is about 61. That's 20 points. That puts you to 101 as the upside target. So down the road, based off of this move right here, if my math is right, you know, we'll go to about 101 down the road. The best spot to be long on an idea like that is right here or right there. And so we're right at it for a shot to push up off this area. This idea breaks with a close below that pivot low, or if price were to close back below that key range low, you know, we have to try again. So at this moment, it's looking the part. It's looking the part for a short-term swing opportunity back towards 70. 3 to 5 days, you know, 5 to 7 maybe. And then if it can get through 72, 72.5, it opens up for a nice continuation to the upside where you retest the high, and ultimately down the road perhaps you break through that high and reach that key range target. So I'd mark that key range right here. From that key range high, the impulse low here gives you the midpoint, and then right there you'll get your targets. So that one's looking really good right there. That is Twitter. Another one here that this one is Roblox, and this one just IPO'd. And for those of you in the trading room, you already know kind of how, you know, the idea that I talk about with this one. But you know, it's only brand new here in the recent month. This is kind of it's a video gaming environment here. It's free. Kids can get on, then they can spend money in these games. They can play with other kids. I guess adults play too. I don't know. Probably not. I'm not sure. But when you have this type of IPO, you get a really good key range that can develop. So you get the low to the high back to the mid, for example. And that gives you a really good key range. So again, I don't have it marked here in NinjaTrader, but you can take the low up to that high, and that's your range. And the low is basically 60. The top up here is 78, so that's 18 points, which puts you at about 96. I think if that's right. So ultimately, the idea is this thing's going to get to about 96 or maybe 95, right? Somewhere in that zone, based off the key range. Again, the best spot to get in would be somewhere here on a trap of that key range low. Trap that key range low, and then look to return it back to the top and perhaps through it into the key range high. So for this one, anything between, I know this is deep though, but anything between 45 and 50 could be a great opportunity to get this thing into 90 in the best case scenario, where maybe it flushes down hard, hits 45, and then pops back up and starts to work up over time. But this one is one of those ones that could also be targeted by the younger folks with their stimulus checks that are coming into the market as participants, because they go to some of these names that they know. And this is a new one that just popped up. So again, down here below this, if there were to be some sort of drop into 50 or maybe even below it, that could be a great opportunity to pick it back up and try for that 90 upside target based off of this key range. So again, I'd mark the key range there for Roblox. AVGO is one here to keep an eye on. AVGO is really good. Let me see here. Here we go. Got the PIMAs on there now. The PIMAs are the pivot-based EMAs right here. 8 period, 21, 34, 55. When you're trending in one direction, for example, trending up, any pullback into the PIMA trigger zone is a great opportunity to look to defend, trap, and rotate higher. And it does that until it fails. And sometimes the market goes sideways like it did here, and these PIMAs are flat. And that's a coiling or compression phase. And once you get a breakout from that phase, these PIMAs will then start to go stacked and sloped again, and any pullback then becomes a buying opportunity. That's what's happening right now with this one. AVGO appears as though it's about to get a significant breakout to the upside, or it already has gotten a breakout, but a further breakout would be tremendous. So you can see this is the compression phase here. This is a big push over the last couple of days. It just hasn't really been able to get over the hump here about 490. But if this is the breakout for the new quarter, then we could be looking at a tremendous breakout up ahead and continuation that takes you up toward 540 or 550. Based off of the recent impulse move here, that's 490 back to about 420. That's 70 points. So that puts you at 560, 562 to be exact. And that's basically that impulse high, big sell off to that low, bounce back, and now that's your key range. If this thing can break this key range to the upside, you have to 560 on a longer term basis down the road. So again, this looks the part right now. It looks pretty significant in terms of the compression phase and now the breakout that's happening. The one thing you'll see here from a pivot range perspective is that's their pivot range, magenta lines. They're lower for this month, lower, but then you had a change of bias with the close being above. They're lower value, but with the change of bias. By closing above, that gives a different bias to the closing relationship and suggests that the move will be up to begin the month. And so if it opens positively, and in this case that means it has to open above the midpoint, you'd like it to open above the central pivot, then any early selling pressure will be defended for a bounce. But this is the last trading day of last month, so really it starts over here. So early strength has been bought, We'll see if we can get a breakout to the upside and continue this much higher. But AVGO is one that could be very, very solid mover over the course of the next 1 to 3 months. Wanted to talk Dropbox. This is one we talked about a little bit earlier in our trading room. This one was really useful in the weekly chart. Here we go. So basically this one is one that has accumulated tremendously down here in this chart. And I know right now there's a lot of pivots here because I'm doing monthly pivots. We're looking at weekly charts. But this is basically what I'm looking at right here. That big rounded price action right there. You have basically 25, 26 here that has served as kind of the rim of that pattern. And then you've had a pretty good push over the last month or so to get going to the upside and the pullback and kind of hold here. This looks the part for opening the door to a big continuation to the upside into this new market structure above. It spent most of its time after its IPO trading in market structure below that. It looks like it's now transitioning above 26s. So as long as price can continue to hold above that 26, there's a shot for this thing to continue higher. Now, there is a big upside target that could be reached down the road that is right in line with a double. And so if you look at this key range right here, I guess it depends on how you want to draw it up. You have this one where you have that high down to this low down here, back up to the mid. Or you also can take it from that low up to that high in the pullback. But basically if you do say 28 to 44, you're looking at somewhere in the 58 zone as a target. 59 zone as a target. And from where we currently are, 28, it's a double just from here if it goes higher. But we could pull back theoretically as deep as 25 to 26 and still be a great continuation for a move higher. Again, you got to keep in mind this is a weekly time frame. So this type of idea could play out over the course of the next year. But you're looking for, anytime you have a rounded bottom, the first stop you're looking for is the previous pivot top. And that's that level right there. It's around 43, 44. And eventually, if you can work through that top, you start working toward that 58, 59 upside target. Again, put that key range on back from back here, and you'll be able to get that upside target. Okay. I also want to take a look at Indy here. Mitesh here is asking about Indy. This should be the Nifty 50, right? At least that's the way I look at it. If you have a different symbol, then please let me know. But this one has been very, very strong. The trend has been very good. I know a lot of you follow this index, and it's been perfect off of the pivots lately. It's been perfect in terms of pivot trend analysis. Very good trending market here. And again, I apologize for this view right here. Usually I don't have all the pivots displayed here, but you can't really turn them off. In NT8, I can only show all of it. Usually I just have the pivot range plotted month over month so I can see it, and then I'll have only the recent pivots on. So it's a little bit more cluttered of a chart than I would normally use. But in any case, you can see the uptrending nature here. You can see this pivot range, and then it's higher next month, and then it's higher, and it's higher, and it's higher. And it's just continued to use the stairs to walk up the pivot range and continue higher. So really strong stuff, very bullish. This recent month is a little different, which is kind of odd in that we have a higher value. So there's a pivot range from last month. Value's higher, but you have a change of bias where price closed below that value relationship. And that would normally indicate early weakness to come when it does that. And so, we've seen an early push downward to begin the month, not a big deal. But that just is just an indication of things kind of weakening a little bit. The trend was very positive, now it's weakening. And that's a result of this range-bound price action over the last 4 to 6, 7 weeks. But this, I always believe that when you have a very strong trend like this one that's happening right now, when you go sideways at the highs, it only, fuels the upcoming move. So this thing is building the energy, and soon it's going to explode and continue higher. That's the idea out of this one. So yeah, we could be looking at much more strength up ahead. Unfortunately, this one doesn't have a great key range. There's some movement here where there's some back and forth where you could set a key range, but nothing that really stands out. I think for this one, if it were to pull back even as deep as 43, it could be a great rejection for a continuation toward 48 to 50 up ahead. So not bad. Anytime you're consolidating at highs during a very mature trend, that's very good. But the value relationship here is just an early indication of potential weakness. For example, if we're to fail to hold 43s, that could lead to a markdown phase for some time. So just some thoughts there on Nifty there. Okay, so I wanted to look at sleep number. This is SNBR. SNBR. And what I'm going to do is I'm going to set this PivotBoss ADR indicator to 1 day. Or 1 period. And now we can see it right here. The color bars right now on the charts here are a result of the indicator, by the way, this indicator. So I like to use paint bars for some of these just in case you want to quickly reference. Basically, anytime you see a blue bar here, that is a range that is 125% greater than average. If you see a magenta bar, that is one that is less than 65% of average range on a 10-period basis. So basically that's 65%, this is 125. If it's above or below, you get a color. If you're anywhere in between, it's just gray, right? So one thing I like about this indicator is that, especially when you have a certain type of stock that's trending in a certain way, as it is here, very good confident trend here. Anytime you get a big high range down day like you do there, you tend to see a snapback. Right? Over here you see a big down day here and you snap back. Over here, you see a big down day here, snap back. Over here, big down day, and you snap back. Today, we got ourselves a big down day, and we think there could be a snapback up ahead. And so, usually, in an uptrending market, you want a big, heavy down day or series of days because that gives you a discount that you can then buy cheaper ahead of the next continuation move higher, right? What's good about this one is that you can see R3 on a composite basis is continuing higher, and this one continues to bounce off that zone and hold it. The PIMAs are stacked. Everything is doing quite well. This one right now, again, has a high odds chance of bouncing back the next day, even just on a one-day basis. You can see after this big down day here, price dropped first and took out the low, then rejected those lows and snapped back to the midpoint of the down day. Same thing happened here, gap down, dropped, rejected, snapped back to the previous midpoint. Over here, this one dropped first, and then it took 2 days to get to the midpoint. This one had a pullback, couldn't get going, then gapped up. So that was a little bit unique. And then this one also failed at the previous low and snapped back over the course of 2 or 3 days back to the midpoint. So this is a 1 day to, say, a 5-day opportunity with the potential to see much more strength ahead if it can break through these highs. Because much like AVGO or some of these other ones, it's compressed so much here over the last 6 or 7 weeks that any breakout could have a ton of fuel behind it where it really moves. So for this one, I call it the fade after trend day trade idea. So you have a big trend day down, you have a midpoint that's here. The midpoint is the high plus low divided by 2 right there. And what you're looking for is any rejection of the low the next morning. So usually you'll open, you'll drop a bit, you'll reject the low, and then you take off the rest of the day, or you push higher toward that midpoint. So basically you can buy at or just after the open and sell it by the end of the day, and you probably have price back toward the midpoint of this range. Again, I don't have my chart fully customized here, so usually I would have a midpoint dot at every one of these bars so that I know where the midpoint is. So that would be a good short-term trade idea. The other idea here is for it to come back toward 148 to 150, which is the top end of the range. So you pull back, you snap back toward that zone. So not only are you going to come back to the midpoint by tomorrow's end, hopefully, or in many cases, but over the course of, again, 5 days or so, you could go somewhere between 145 and 150. So right now, taking a look at the 135 puts, you could sell 135, 130 put spread 11 days out. I guess now 10 days out to the April expiration here. And as long as it closes above 135 here, it's a good credit. By the end of the day, I had seen a credit that was in the 275s for that $5 spread. But if tomorrow opens like this, or like this, or like this, where it has to drop first, drop first, drop first, it'll go from 275 to maybe 3, or maybe even a little bit more as a credit, and then it pops higher and closes above 135 several days out. So this is a good short-term opportunity, again, from a one-day perspective, and then over the course of the next 5 days or so. And then if this thing can get through 152 at some point down the road, it opens up a big continuation to the upside. Based off of this impulse move here, you're looking at about 190 as the ultimate upside target. So that is SNBR. I wanted to talk also a little bit about Amazon. So Amazon here has an inverted head and shoulder type of pattern here. What's really significant about this one is the rejection that occurred. So you can see, you know, right here we have a really good area of support. It's about 28.80. You can see it right across here and here and here. We hit 28.81 here a few weeks back, and that was a buy signal for us in the room as a candidate that could snap back toward kind of the middle of the range. But it was kind of one of those candidates that, again, when we did the March monthly outlook, I mentioned at the time that this one, it was very curious that it had just gone sideways for 7, 8, going on 9 months now, and hasn't really participated in the uptrend after the initial, COVID bounce. So, was that a sign of distribution? Did we need to poke a little bit lower first? And it certainly did auction lower first. You can see from here we sold off. Very good strong low. A lot of stocks put in a low at that time, and you can see here that each bounce off that zone has led this thing back toward about 3,200, and we've gotten that move now, and we closed through it today. And so very similar to the QQQ triangle that we talked about a bit earlier and the corresponding triangle in the NQ, you're seeing compression like this as well in Amazon, and you're seeing a strong breakout right there. You're also seeing a move back above that 3,200, which is kind of the midpoint of this range or thereabouts. And now you're looking at the potential to now shift, if this is a transition day, shift from this lower price structure into the upper price structure, which means if price can continue to hold above 3,150 to 3,200 here, we have a high likelihood of going up toward 3,450 to 3,500 over the next few weeks. And it could get there even faster than that. Basically, it's this move. It's once you're done with this range, look at that. That was an inverted head and shoulder. It only took 3 days or so, 2 days from here to here, and you were there. And then you're back down. Over here, the same thing. It did a lot of trading here, and then there's a transition day, and bang, right into the high. And so here we are again. Compression phase in the lower distribution, transition day, 3,200 to 3,450 to 3,500 could be ahead over the next 1, 2, or 3 weeks. So this is very positive. Again, if Amazon's going to start making a move to the upside, it'll be hard for the NQ to go down. Speaking of which, let's take a look at SMW. This is the semiconductor ETF. Right now, those are looking pretty solid. Semiconductors, that is, that whole group. You can see right now as a composite, it's looking very strong. It's looking the part. This looks really significant. You have compression here. You had mostly sideways price action over the last 2.5 months. But that price action has occurred at the highs of a very mature bullish trend. And now this type of 3-day start, 2-day, 3-day start to the new month here is very significant. That again had a lower value with a change of bias close, and now we're continuing higher. We could be looking at a continuation toward 290 in this one. If you're taking at least this previous range here, you have 290 as your outer target. It depends on how you want to draw your key range. But a very good continuation here could be seen out of SMH. Looking at FCX a little bit earlier. FCX has had a really good trend as well, so a lot of these have very good mature trends that they've been following for some time. One thing we've noted as well as in our trading room is that we're starting to see an expanding volatility profile of these trends. So the trend, was at one point like this, very moderate, then it got bigger here with this wave of movement, then bigger with this movement, and now we've built up this energy, which could lead to the next big wave of movement up ahead, where we start working toward the upper end of that cone. So right now, we've seen a pretty significant breakout to the upside via the breakaway gap there. This is 2 months with back-to-back kind of narrow pivot ranges, a neutral. But in the midst of this uptrend and with this compression here, if this thing can start getting through 36s here, it opens up a ton of upside that could be ahead, something that could look like this or like this or like this. We could see that up ahead. So 45, 46 could be up ahead if this thing can get going. And so far, so good. Looking pretty decent off this low. Another one I was looking at a little bit earlier here is FSLY. This one's a little different than some of the other ones we've looked at here. The main difference on this one is that you can see this is a very volatile issue here, number one, so a little bit more cautious if you're going to engage this one. 60 to about 120, that's the range. Obviously we did get a little bit higher than that, 135, but 60 is about the bottom end of this range as it is right now. There's been a very good rejection here recently with a bit of a higher low with a narrow 4-day range. We haven't really seen any rejection yet. We haven't seen anything happen, but just from a pure value and price perspective, we're in the lower part of the trading range here that makes sense to look for an entry for a return back toward the middle portion of the range, say 90, and then a push across the side, the other side of the range into 120. So right now, you have a market right now that has held. And if you look at these composite PivotBoss bands, right, that's VWAP, R1, R2, R3, S1, S2, S3 is a little bit lower. They're flat bands. And right now it's holding, right at the second and first band here. That's about where it's bounced here before. Can this thing get going to the upside here? So again, over the course of the next couple of months, we might find ourselves up here between 110 and 160. 60 here into 120, again, could be a double for that candidate. So keep an eye on this one here, as it could lead to more strength up ahead. And again, please let me know if you have any candidates you'd like me to take a look at. I know there were a couple here mentioned, or at least one that I got to there. I've pretty much covered most of the candidates that I wanted to cover there. Let's see. I don't think I covered this one here. Again, mostly stock candidates here since we weren't really able to look at the futures here. Twilio is one that I think has a really good shot to see a big wave of strength up ahead. So keep an eye on this one from kind of a multi-month perspective. It could also be a swing perspective where it's just, say, the next couple of weeks. But this one really looks good from, a 3 to 6 month move type of perspective. If you look at the general trend here, it's been very strong. Again, this is another one of those that has an expanding volatility profile here. We're kind of at the lower end of this range right now. You can see this is a lower low failure here. Lower low failure. So if you wanted to draw it kind of like this, you can draw it like that. The other thing you'll see right here is right there you're seeing a failed new low develop after a lower low failure. We've been calling this the fridge trade here lately in the trading room. You can see it in all different types of time frames. But I haven't updated it just yet. I just turned it on like right before we got on, so all my futures are a little bit old, so I just need to go in there and update. So if you look at the futures, it's going back to like last fall. So I just need to go in there and get it going. Right here you can see lower low failure. You have a failed new low right there. You have a great uptrending market. This type of setup can tend to lead to an explosive breakout move followed by multiple months of continuation. So again, if we see strength here up ahead out of this one, it might not just be 1 month, it might be 2 or 3. You know, very similar to kind of like this type of move right here. 1 good month, 2, 3, 4 months of strength as it pushes higher. The upper end of this range, based off of the current key range, because this is a good key range here, that high to this low, there's the midpoint. You're looking at a 530 target, 529.96. That's just based off of this key range right here. You could do a wider key range if you wanted to as well, but I like the lower low failure, and then I like to see this thing push higher through this upper kind of trend line right here. When you can break that line in an uptrending market, man, this thing just can explode to the upside here. Oh, ES, was it pound pound? Or I have to add it all that. Multiple pounds. Again, it's been a while since I've jumped on Ninja Trader. Oh, look at this. Man, Vanu, I learned something there. Awesome. It looks good. Thank you for that. Well, we have a little bit more time here then. But this one, again, based on what we talked about a little bit earlier, ascending range, a big solid breakout there, a nice pullback, and a continuation to the upside could be ahead. Thank you again for that tip on plotting here. That's pretty awesome. The NQ, I suppose, would be here. And with the NQ, again, we're looking at the breakout here of this range that has developed over the last month plus. Very strong breakout here. With the key range that I marked from before, which I believe is from here to here and down, the ultimate upside target is 15K. So I believe I mentioned that a little bit earlier, but since we have the chart up right now, here's the breakout. The key range I'm using is this low to that high, so that range projected higher gets you 15K. We talked about this as it was developing in here. The other day, price was just below 13K, and we mentioned, you know, this is the spot where you likely see a 13 to 15K move. Perhaps, you know, just being safe by the end of May to June, right? Or the end of June, perhaps. So give it the quarter to play out. But this looks very, very promising from that standpoint. The other thing here that I didn't get to mention a little bit earlier, again, Vanu getting us the cheat code here so I can plot the futures. But this is crude oil. And crude oil right now has a narrow 11-day range that is developed. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days now. So I will update the advanced ADR indicator to 11 days there. Click apply. And you can see right here it's compressed. It has a magenta coloring there. This one right here super compressed, and that's why you see that. But really, this is what I try to mention to our traders in the room. You know, in terms of the raw range itself, it's not super compressed. It's just the volatility has been so high that this qualifies as a compression. You can see if we look back, all the other times where it was compressed, it was way below that line. So it's not so much that this is a super narrow range. You can see when it gets super narrow, it's super narrow, like here and here. Each of those times helped us identify that a breakout was coming. You're seeing the same type of price action here. It's compressing, and we're likely due for that move. Now, from 11-day perspective, we're looking at about 10 points of range, potential range. Again, the volatility is much higher right now, so maybe that's too much. You know, maybe 9 points, 8 to 9 points might be better expectation. But which direction do we go? And this is where it gets a little tricky here for CL. If you look at this from a weekly perspective, something that we talked about before was how at the beginning of the year this one jumped 50. And because it jumped 50 on the first week of the new year, we mentioned that there's a high likelihood that we'd get to 65. Once we got to 65, maybe get over it in 66, you know, a rejection there could lead us back across the range to the lows. And then from there, it could bounce back up and bounce, just like we did back here. So there's two kind of thoughts here. Number one is we're in such a good, strong trend. Maybe this leads to at least a retest of the high, so there might be some short-term strength. But my logic tells me that we're on the way back down toward 50 to 52s, 52 being value. You can see just from this perspective here, that's composite VWAP, that's 5270s. So 62 is going to be the level. So we got compression here. If there's a rejection at 62, say it tries to break out through 62 and there's a lower high that develops, that lower high could get slammed for a push back into 50. If this thing gets back to 50, it's likely a big buy back up towards 68. So right now, looking really good here. Within the range, built up a ton of energy here. You can see the compression on an 11-day profile there. Very compressed. And when you see that, you know, when you see that pink develop, you're expecting to see the blue that comes out at some point, which would indicate increased volatility. So that could be ahead. Let's see. Gold. Yeah, gold is really good here in that it may have or may be attempting to change the tide here finally. It has been downtrending ever since the first week of the year. So gold and the dollar, those two really set a tone in the first trading day of the year or the first trading week of the year. You can see how this one rallied for the first 2 days, bearish outside day, and that set the tone down, and then has been downtrending ever since. PIMA trigger zones being rejected time and again, and we've gotten a move lower. With this one now, we have a key level that comes in at about 1765. It's like these lows here, and so we've now developed a range below that zone. If it can finally get above 1765, then you start to trade in the upper range here into 1880. So that's kind of the hurdle to jump here for this one. For the most part, this is a failed new low, or a failed low, so it had a higher low here, couldn't even get a new low, and it's now popped back up. The pivot range is this tiny little pivot for the month, and so it's blowing through it right now, which would at the very least suggest a push back towards 1757.40, which is the previous month's high. And if it can start to climb through that level, it could work its way ultimately back toward 1840, which is value, or maybe even higher. Again, what I love about NinjaTrader 8 is we have our composite pivots here, or composite bands, and that's VWAP. You know, it compressed here and then it's sold off to 3 standard deviations below and bounced, and that's been the low ever since. This is a higher low off 3 standards. You know, if it's going to bounce off of here, it has a high odds chance of reaching VWAP. So that would be about 1840. So those are some thoughts right there on GC. So silver here, we looked at this one a little recently, and it has really great support. You know, down at the lower end of this range over here, 22s. It's kind of been choppy around this middle portion of the range. You got this kind of upper portion. It just recently bounced off of VWAP here from a composite basis, but it remains in a downtrending market here. The lower value relationship is present here, so you have the pivot range here and a lower value relationship and a confirming close, which would usually mean that any first push into the pivot range would be rejected. And we've seen that happen. We saw the push up, then we saw a failed high, and it closed back out of it. So you would normally kind of expect that. But if it can start to push through this middle pivot, which is the previous month's midpoint, it opens up the previous high and the upper end of the range. So right now, not really trading at the lower end of its price range, but it is seeing a favorable bounce off of value. So that's value 2410. You've seen it happen here and there. So it does respond off that area. If it can stay above 2450 here, it has a short-term shot to move higher toward 2717. Yeah, that's a good one. Here's Bitcoin. So Bitcoin here has had a tremendous rally. Obviously, we've had key ranges that have developed throughout the way. One of the key ranges we talked about was this 2-day key range right here, and mentioned that a trap here below 30K could double your money, and you can see it went all the way to 60 now. Tremendous how fast that happens. But you can see here that's market structure, then it trades and creates new market structure. One thing you'll notice here that's similar to the ES is that we're seeing kind of an ascending pattern develop here, just like the ES before it broke out here recently. So this is very positive. Some may see a double top here that could fail at some point, but this market just remains too strong. I would also say that this key range right here could be the next important key range. So if we were to drop even as deep as 42.50 to 45, that might be the next go time for another even continuation higher. This thing could get very, very interesting and could be reaching towards 75 or even higher. Based off of last month's range from that low, actually no, it was the month before that. Yeah, based off last month's range, we have this low here, that high. So there's the range. That would take you to 77s as an upside target. And then you have your significant range over here, which would give you a target even higher. So this one remains very strong. Ideal zone would be somewhere between 42.50, 42.500 and 45K for a shot at rotating this thing back up. But very, very strong. At some point, if it does have a day of reckoning, it would have to go through the 34 period pivot based EMA. The 34 here has held here. It's held perfectly there. And it just hasn't even sniffed 55 or anything there. So it would have to have a really adverse close there in order to suggest more weakness from there. So Bitcoin looking really strong still, and has remained very, very bullish. Good stuff. All right, well, thank you all very much for rolling with the punches with me here. Having issues with Thinkorswim, so switching over to NT8. I always wonder why I don't use it more, because it's such a great platform here. So, you know, looking at it with the composite bands is always a lot of fun, because again, higher time frame bands lead to bigger moves. Again, thank you very much for joining me here today. A lot of great candidates here to look forward to. I really like Twitter. We talked about AVGO, Dropbox, and some of these others have some really, really good potential ahead. Tech looks like it's unwinding to the upside, which could lead to a tremendous move for the NQ from, again, 13K to 15K, which means the QQQ and others like the SMH could be headed much higher as well. So it could be a very bullish start to the quarter at the very least. And these breakouts right now look the part, and if they fail, that would be very, very telling. But for right now, any pullback here could be a great buying opportunity for the rest of the month. Again, thank you very much for joining me. Thank you, Vinu, for the futures hack. That was very, very helpful. And again, everyone have a fantastic rest of your night, and I will see you in the trading room. Take care, folks. See you soon.